Well, markets have been quite volatile throughout January, and one of those reasons has been that there is an anticipation for a rate increase. Now, the FOMC meeting concluded yesterday, and the Federal Reserve Chairman shortly after that gave his comments on what the FOMC's broad outlook is. And the commentary can't be more explicit. There is going to be a hike in interest rates, and it's coming soon. He also said that there is quite a bit of room to increase interest rates, which means that the quantum of the raise may also be higher than anticipated. Now, of course, there are no clear timelines with regard to when the rate increase will start or by how much. But what is evident is that it's going to be a rate increase, and what people are expecting, or what market experts are expecting, is that it's going to happen soon in the March meeting itself. And that led the Dow to whipsaw. It was in the green, about 1.2, 1.3% higher in trade before it went 1/3% lower at close of trade on Wednesday. The S&P 500 was also down around 15 basis points after going up over 1.5%, and the Nasdaq closed absolutely flat, up just 2 basis points after gaining over 2 to 2.5% in trade yesterday. Well, European markets, which were closed by the time the Federal Reserve Chairman made his remarks, gained as investors braced for those remarks. The DAX was up over 2%, the FTSE was up over 1.3%, the CAC was also up over 2%, with the Stock 600 up 1/2%. Moving quickly on to how Asia has responded early in trade today. Well, we're seeing a sea of red at the moment. The Nikkei is down almost 2.5%, the ASX 200 and the Kospi also down over 2.5%, in fact closer to the 3% mark, the lower 3% at the start of trade today. The Shanghai is down around 2/3%, while the Hang Seng is also down over 2% in early trade today. Well, the SGX Nifty also not looking very pretty. It's down 2% as well. So markets factoring in this interest rate hike, which means that they have started the day lower. When we look at commodities, well, Brent crude topped the $90 a barrel mark, which is not the kind of threshold we've seen over the last 7 to 8 years. Oil is now currently, it's leveled off a bit. It's at just above that $87 a barrel mark. Gold prices also retreated after Fed comments. Of course, there's more money flow going towards bonds, and that led gold prices to retreat a bit. It's currently at $1,815 an ounce. When we look at the dollar index, that's gained over 0.5% in early trade today. Sharp move made by the dollar index, and it's above the 96.5 mark. The US 10-year treasury yields have crossed the 1.85% mark. They're in fact closer to that 1.86% as we speak. Of course, the Fed has hinted at a possible rate hike, and that may possibly happen by as early as March, and that's leading interest rates higher. Bitcoin is down almost 1.5% in early trade. It's just above the $36,000 mark. That's how global indices are looking in early trade this Thursday.